you say, Tim, for investors, there are three potential scenarios to think through in the months ahead. Walk us through, Tim, to start, what those scenarios are exactly.
Well, Josh, it's great to see you. And right now, we think it is incredibly important for investors to prepare their portfolios for maximum flexibility. Nobody knows the end game when it comes to tariffs. I'd venture to say not even the president himself knows the end outcome. And this could go many different ways. On the bullish side of the spectrum, we could see very significant deals struck with all major trading partners, which could very easily push the S&P 500 up in the 64, 6,500 range. You could see legal challenges to these tariffs be successful, or you could see the president start to walk back some of what he's laid out thus far this year. That's the bull case. Very good odds of one of those three playing out. And then on the bearish side, which is almost equally as important to be paying attention here, you could see deals struck with just some of the minor trading partners. There's a lot of hair on deals when we look at things like China or the EU. If that happens and those tariffs stay on for a long time, a recession would become our base case, in which case you'd see valuations derate meaningfully. We could easily see the S&P going back to that 41, 4,200 range. So right now, a lot of question marks. Need to prepare that portfolio for maximum flexibility.
So how do you go about doing that? I mean, because these, even though there might be some bleed over from some of these cases to one another, right? There might be some from column A, some from column B, but it seems as though there might be quite different outcomes in markets depending on what happens here. So how do you prepare your portfolio for any one of them to happen?
Yeah, I think there's a couple different options here. One would be looking at specific names in the market that are going to be more insulated. When we look at names like Microsoft, where they sell software, right? They're not going to be as impacted by the tariffs. They're also in the midst of this AI trade, which we don't think anything is slowing that down. You heard a lot of the spending announcements on recent earnings calls from the Metas, Amazons of the world. That trend is going to continue. So finding gems or diamonds in the rough like that is one way. We're also seeing a lot of interest from investors moving into strategies that help cover you on the way up and the way down. One idea that has been very popular this year, managed floor ETFs like SFLR, where you're targeting a 10% floor against losses on the downside. And then if the market goes up, you're participating in 70 to 80% of the gains. So we see both of those methods, really finding those stocks that are going to be more insulated, and then also hedging with options-based strategies like SFLR as really a good way to manage around and prepare for a wide range of outcomes.
What about retail names, Tim? I mean, look at some of those names. They have been hard hit. You think broadly, is a lot of the bad news now priced in?
I don't think so, Josh. Those are not the diamonds in the rough. I think we want to be very cautious on a lot of those names. You're going to look at either demand being hit or margins being hit if tariffs go into effect. So I think there's still a lot of unknowns. Retail names are going to be very vulnerable to that. If you look at the move that we saw post-Liberation Day, retail stocks got hit a lot harder than the broad market. So in this environment where, yes, there's a lot of chatter about good news, we still don't think that's a done deal. It's not locked in. Retail stocks are not the way to go here.
And what about, now we're coming off of a couple of weeks where we heard from a lot of big tech, and it was a pretty mixed picture when it came to big tech. So then how are you approaching that group now, Tim?
Well, I think it depends on the name. It depends on the different business lines that they're in. Overall, we still do think, especially like the bigger ones, we look at Amazon. You have so many different business units. The cloud, Amazon Web Services, we think is still going to do extremely well, given the AI tailwinds that you see. While on the other side, the retail side is probably going to take a little bit of a hit from demand if these tariffs do go into effect. So overall, we do think, up in quality is still the way to go, which a lot of those mega tech names are. So probably one of the best places to be if we look at this market over the next 3 to 6 months.
Tim, Fed meeting this week. What do you expect to hear from Jay Powell?
Well, we don't expect any rate cuts. And Josh, we don't think there's going to be any rate cuts probably until September. I think the Fed is in a good spot right now. They are very flexible in what they can bring, and they can really sit back and be patient, see how things develop, how much the economy takes a hit from a lot of the fiscal policy and the tariff announcements that we see. So Powell and team, we think are in a very good spot. We don't think they're going to cut. And if they were to cut, Josh, we would be a little bit concerned of that. If you look at the intermediate, longer end of the curve back September through December of last year, when the Fed cut 100 basis points, you saw those yields move up anywhere from 70 to 90 basis points because that was spooking the bond market. They were getting more concerned about inflation. That's not something that we want to see. We don't think the Fed goes that route. But right now, we see them comfortably sitting in a pretty good spot to be able to react one way or the other.
Tim, lastly, and sort of switching gears here, of course, this weekend, Warren Buffett announced at the end of the year he's going to be stepping down as CEO of Berkshire Hathaway, the company that he took over in 1965. And obviously, he's an investing icon. So I was just curious whether you think some of the lessons that he has talked about over the years are still applicable in today's markets, and what's sort of most pertinent or relevant as far as you're concerned.
Oh, Julie, we've been using a lot of Warren Buffett quotes here with a lot of our advisors here. And one of the biggest ones, which he hammered home this weekend as well, was just how patience wins over the long term. You have to be patient. You have to invest in good quality businesses. And I think when we're in this announcement here with just waiting on this, what the end result is of this 90-day pause, you have to be patient. You have to find ways to stay in the market, to stay invested. And when others become fearful, you look to capitalize.